You probably already heard investment is about money makes money. With inflation on the rise, if you hold 100% in cash, it means you are losing money. But where do you start? In school, we didn't learn money management, and now the internet is full of scams. And without proper guidance, you probably risk losing your hard-earned money. In today's video, I'll walk you through a step-by-step journey tailored for beginners, even if you're just starting with 100. In the next 10 minutes, I will cover 8 crucial steps. 1. Why investing matters. 2. Setting investment goals. 3. Understanding risk. 4. Knowing the different asset classes such as stock, bonds, real estate. 5. Choosing the right investment vehicles such as ETF, mutual fund, index funds. 6. Opening an investment account. 7. Making your first investment. 8. Monitoring your portfolio. If you're new here, my name is Charlene. I'm a chartered financial analyst with a decade of experience in finance across Asia and Europe. My channel covers personal finance money tips, financial market investment, career and personal development. Subscribe now and you will be one step closer to financial freedom. Okay, let's get started. 1. Why investing matters. Before we jump into the real steps, let's quickly discuss why investing is essential. Investing, think of it like planting a money tree. You are basically letting your money and time to do the heavy lifting. Over time, that money can grow. Dream of buying a house or a chill retirement, maybe that dream vacation. Investing can be your ticket to those goals. And also, you don't want your savings to lose value, for example, against inflation, right? Investing helps with that. What is inflation, you may ask? Well, in plain English, it means stuff just costs more over time. Like if you check the price of 10x today versus 10 years ago, chances are the price is higher now. That's inflation doing its work. If you want to go deeper into it, I got a video you love. All you need to know about inflation and deflation. You can find the links here, or I will also put the link in the description. Okay, now let's dive into the practical steps. First thing first, ask yourself, what do you want to achieve with your investments? We just talked about so many things just now. It could be short-term goals like an emergency fund, buying a house to live in, or a long-term goals like early retirement. Based on your goals, then you determine your time horizon. How long can you leave your money invested? The longer, the better for compounding. What is compounding? In simple terms, compounding or compound interest means money makes extra money and the extra money keeps making even more extra money. Again, if you want to do a deep dive, check my video titled Warren Buffett, The Easiest Way to Get Rich, Compound Interest Explained. The link is here and in the description as well. So over the past 10 years, the question that I always receive from my friends is, Charlene, should I buy this ETF or should I buy this stock? It's really not a yes and no answer. Why? Without knowing your investment goals, time horizon, existing investment portfolio, risk appetite, I can't give you any constructive advice. Everyone is different. So before you put any real money into any investments, ask yourself, what is your investment goals? What is your time horizon? And what is your risk appetite? And then, what is risk appetite? That's the next step. Risk is a really crucial factor in investing. You may have heard that high risk, high return, right? Please repeat with me 3 times. High risk, high return, high risk, high return, high risk, high return. Always remember this golden rule. Risk tolerance or risk appetite. I know academics makes a fuss about the difference between the two, but we're keeping it simple here. Basically, it's all about how okay you are with the roller coaster ride of the market. Your comfort level with those market ups and downs is going to steer your investment decisions. For example, if you're cool with the idea of your investment dropping by, let's say, 30% and it won't keep you up at night, then you might want to consider putting more money into stocks or even cryptocurrencies. But if you're like, I can only accept minimal risk, I will have a heartbreak if my portfolio loses 10%, then you might want to invest mainly in bonds. Step 4, knowing different asset classes. Then you may ask me, what are stocks, bonds, cryptocurrencies? That's the next step, knowing the different asset classes. In the finance world, we talk about 3 categories: equities, fixed income, alternatives. All right, let's break it down. Equities or stocks, people usually use the 2 words interchangeably. Imagine if you're buying a tiny piece of a company like a mini owner. That stock's for you. If the company does well, your piece might be worth more. But if it tanks, well, your piece might shrink in value as well. Fixed income or bonds. People use these two terms interchangeably as well, slightly different, but we don't need to know the nuances at this stage. Think of it like lending your friends some cash, and in return, they promise to pay you back with a little extra as a thank you. That extra is interest. Bonds are like that, but you are lending your money to companies or governments. Alternatives. This is the diverse category. Anything which doesn't belong to equities or bonds, they are pretty much alternatives. It could be real estate, could be art, could be hedge fund, could be private equity, cryptocurrency, commodity, could be wine, could be whiskey. They're not your typical stocks or bonds, but they can spice up your investment mix, like the mystery flavor in the candy box. Subscribe to my channel, I will tell you about them one by one. Then you may ask me, Charlene, apart from stocks and bonds or alternatives, I also heard things called ETFs, mutual funds, index funds. Are they also asset classes? No, that's the step 5, choosing investment vehicles. A common mistake that I see among my friends is that 90% of the people are confused about the difference between asset classes, like stock and bonds, and investment vehicles such as ETF and mutual funds. They are totally two different things. How you can see it is like a box of chocolate. The chocolates are asset classes, and the box itself is an investment vehicle or a financial instrument, a wrapper, a container. For example, if you want to invest in the stock market, you can buy a direct stock, which is a single security wrapper. You can also buy a stock fund. The fund is a wrapper, or ETF. They are boxes, whereas the stocks inside are the chocolates. If you want to dive into what ETFs, mutual funds, and index funds are, please check my previous video on this topic. I put the link here, also in the description. Let me do a quick recap here. In simple terms, ETFs are like stocks you can buy and sell during the day. They usually follow specific markets. Mutual funds are managed by experts and you can only trade them once a day. Index funds aim to match the market performance with lower fees. Okay, after knowing all the basics, now you are ready to open an investment account. There are so many options in the market, right? Should I open an investment account with my bank or with an online broker? There are also some trading platforms. I also heard something called robo-advisors. Are they safe? Will someone steal my money? If you have this confusion or frustration, you are not alone. Put it simple, to figure out the best investment platform for you, you need to think about your money goals. Some tips are here. 1. Check if it's a licensed financial institution or not. 2. How much you want to be hands-on with your money. 3. Look at things like fees. 4. How easy it is to access your money. And 5. Do they offer any extra services? After you've got your investment account set up, it's time to dive into the fun stuff. You can start by buying a single stock you really like, or maybe go for an ETF. You don't need a ton of money to begin. Even 100 can get you started. And here's the cool thing. Some platforms let you try out fake trades first, so you can get a hang of it without really risking real money. So start small and take it easy. Congratulations, you are officially an investor. Keep an eye on your investments. Market change and your portfolio should change sometimes as well, although I don't advise beginner investors to do frequent trading. We're investors, not speculators. Stay informed about financial news and developments that could impact your investments. By the way, I'm actually creating a playlist called Breaking Financial News of the Week Explained. I know when you watch news on Bloomberg, CNBC, or read Financial Times, those people often make things sound like rocket science, right? Well, I used to be a banking journalist myself, so I'm going to take that fancy jargon and break it down in plain English for you. Okay, that's a wrap on our step-by-step guide on how to start investing for beginners. Let's do a quick recap of the 8 steps. 1. Why investing matters. Investing is like planting a money tree, protecting you from inflation and helping you achieve financial dreams. 2. Setting investment goals. Determine what you aim to achieve, be it short-term or long-term goal, and set a time horizon. 3. Understanding risks. Recognize the balance between risk and return and determine your level that you are comfortable with. 4. Knowing different asset classes. Familiarize yourself with equity stocks, fixed income bonds, and alternatives like real estate and cryptocurrencies. 5. Choosing investment vehicles. Understanding the difference between asset classes and investment vehicles like ETFs, mutual funds, and index funds. 6. Opening an investment account. Choose the right platform based on your goals, ensuring it's licensed and considering factors like fees and accessibility. 7. Making your first investment. Start small, even with 100, and consider using platforms that offer practice trades. 8. Monitoring and adjusting. Regularly review your investment. Stay informed and adjust as needed, focusing on long-term investing rather than frequent trading. Remember, investing is a journey and it's okay to start small. If you found this video helpful, don't forget to hit the subscribe button. With my 10 years experience in finance, I just have so much more to share with you. Thanks for watching and happy investing. See you next time.